Hello, everybody. Welcome back to the Running Real Estate Podcast. After a couple weeks hiatus here with the 4th of July holiday, we are back with another great podcast. Excited today to have somebody on the podcast that I've known for a very long time in multiple facets of the real estate world, who's still kind of in that realm, and somebody who I think is going to bring a wealth of knowledge here to share with our listeners and clients. So excited to introduce you today to Denny Murphy with Bradley Atlantic Insurance. Denny, thanks for being on.
So happy to be here. Thanks for having me. Been wanting to do this and catch up with you for a long time.
Yeah.
Funny enough, you and I haven't caught up in forever.
It's true.
Okay, so you might remember like 2019, 2020, Jenna, Christy, you and myself had lunch. You remember that?
I do.
Okay, we went to Liquid Assets.
Yeah.
I thought for sure that Ryan was maybe going to float a business opportunity, some sort of like partnership, referral program, something like that. So, I mean, I took it seriously. I got my tie on. I think I even might have shined my penny loafers. And then we got there, and him and Christy immediately order a couple martinis. And I think to myself, oh, my God, this is a friendly outreach. I came with the whole wrong expectation. So I've actually been meaning to reach out to you a long time. We got to do that again. We got to reset the expectation clock, and then I got to come ready to mingle with less of a business face.
Well, I guarantee, the way we were approaching it was still probably, thinking in business, just depending on how the conversation would go.
Yeah,
and
okay.
We've been talking for years. I don't know exactly when we first met, but for me, being in the real estate world, and I'll let you get into kind of your history a little bit, but Denny, you've been very involved on the rental side for a while, vacation rentals, and you were such a huge asset for my clients when we first met, being able to give projections, give them great advice as to the real estate vacation rental market. That's got to be 2011, 2010.
Yeah. Yep.
Just about when we opened Atlantic Shores Realty.
Yep, absolutely. That was, I was probably 2 or 3 years into it at that point. And, you were instrumental in sort of bringing some of those more kind of heavy-hitting, bigger, upper third of the market clients our way, and I know you had me on to talk about insurance, and we'll certainly do that, but, that was a big boon to our portfolio, when we started getting some of those 5-bedroom ocean sides and 4-bedroom ocean sides and things like that. So, glad we connected over that. And I don't even know how we originally got together.
I'm not 100% sure either. I know I'm always looking for good partners and people who know what they're doing. But, I remember you just always had great knowledge and you were able to build a really strong business. And maybe that's where we should start off here on this podcast to kind of give our listeners some context. So Denny, you, from what I know, you're kind of a shore native, kind of, upper shore, and then made your way down this way and got into rentals. Maybe give us the background.
Shore native. Brief stint in Philadelphia after college selling mortgage-backed securities.
Oh, wow.
We all can remember how that went. It was a great experience, but it wasn't pretty at the end. My goal was to always get back to the shore. Okay, so having that market tightened and getting booted from my first out-of-college job sort of accelerated that. I got back to the shore. I bummed around for couple years, between 2007 and 2008, I was building boats. Mm-hmm. I was hanging drywall. I was doing all sorts of, more blue collar, Eastern Shore traditional kind of stuff. And then I got involved with a vacation rental management company that was going to offer some more, steady income. And it all just sort of churned from there.
Got it. So are you originally from that Easton area, like St. Michael's up that way, Cambridge?
Just west of Easton, Queenstown,
okay.
Centerville.
Got it.
Yeah. Middle Queen Anne's County, northern Queen Anne's County. Yeah, gorgeous part of the shore.
Yeah, absolutely. Yeah. And then so what got you, was it the job opportunity that took you to Ocean City, or were you just kind of drawn to the beach?
I actually wasn't drawn to the beach. I love the mid-shore. I loved the Wye River and the Chester River and, certainly the base of friends and family that I had there. It was 100% opportunity. I loved the guys that were getting me involved in this real estate company and the vacation rental management. They were movers and shakers. They had a lot of good things that they were offering, a lot of things that weren't being offered in Ocean City, Maryland, from a vacation rental standpoint, quality, sort of value added things to the end users, both on the owner side and on the renter side at that time. They were just 10 years ahead of what everybody else was doing.
Right.
I was sort of drawn to that, but it certainly wasn't the beach. But it's sort of been the beach that's kept me here.
Interesting.
And I sort of noticed that it's kind of a transient community. You get a lot of people that come here, but I noticed that everybody sort of makes this the last stop. I don't see a lot of people that like come here and then bounce away. I never thought that I'd like a county better than Queen Anne's County, Talbot County, sort of Caroline County area. But I mean, this has been awesome for my family and I.
Yeah. And so back then it was just kind of, from what I recall, kind of just getting that family started. Yeah. And kind of parallel to my, my family, and now here we are, fast forward, these kids are starting to get older. And we're pretty entrenched in the community here. Yeah. You're really entrenched in Berlin. I mean, you're literally like, your office is next door and your house is what, 4 doors down? Yep.
About all 400 yards that way. Yeah. We got a lot of big renovation project going on right now. We've lived in Fenwick Island. We've lived in Ocean Pines, and now we've migrated slowly south, and I think this is going to be our last stop.
Yeah, well, you got a pretty good spot.
Yeah, no doubt.
High demand to get on Main Street in Berlin, and you're there. So.
We sort of found the back door in. I've been looking at that house for years, and then I convinced my mother-in-law to buy it about 2 years ago, and then I jumped in and bought it from her about 6 months ago. So,
okay.
Yeah.
Got to do what you got to do.
Backdoor my way in on that one. Yeah.
Well, that's good. So before we get too much into Berlin, maybe let's talk a little bit more about, I mean, you're absolutely right. I mean, so the connection between you and I had clients who wanted to buy real estate, but they needed some assistance when it came to vacation rentals. And I always tried to stay in my lane, which is sales. I know sales, the rental side. I've got rentals. I know enough to be dangerous, but I needed somebody who had some expertise that I could point them to give great advice. And that's really where you came in. And the company you were working with, like you said, you guys were way ahead of everybody else and put together a great program that really helped our clients. So maybe talk a little bit about that and how you learned that business and maybe where it's taking you to today.
It's a really
Loaded
easy
question.
business. Okay, it's not a terribly complicated business in that it's just really about responsiveness, much like sales is, I'm sure, and being kind, being fair, and trying to work through problems like on a proactive basis, and not necessarily after a problem's fallen in your lap. A ton of problems, fell in our lap. We were lucky enough to get a great team put together during that time, and things just sort of took off with with Chris and Terry, with a couple other great realtors in the area, and then as you said, families get older, things happen, and one thing that the vacation rental taught me was sort of the beauty of an annuity-based career.
Right.
Okay, so there are a lot of things I didn't like about the rentals, namely nights, weekends, all the simple stuff that's sort of like a no-brainer. Like, it gets old. It's easy when, before the kids come along. After the kids come along, it gets much harder. So I knew I loved the annuity-based system. I knew that I loved a value selling type of business. Started looking around, started seeing a lot of my friends do really well in insurance. Certainly there's a need for that down here, just like there's a need for vacation rentals, a strong service-based insurance agency or, professional. So just started looking for that right fit. And then, within a couple years of sort of planting that seed, I sort of found my spot on the bus at Bradley Atlantic.
Okay. So, insurance, I mean, there's so many different, obviously I know real estate. I think about real estate all the time. But I do kind of think about some of these other businesses and how it all works, how you get your clients, what lines of insurance do you get into? And I mean, with regard to what I first and foremost think about is how it translates to real estate.
Yeah.
Right. And I've got a house, I've got cars, I've got rental properties, and you cover it all. Is that correct?
We do. So our focus is I would say commercial. Okay. We do a lot of folks that build the real estate that you see every day, the plumbers, the contractors, masons, wrench, anybody who's turning a wrench or swinging a hammer or laying concrete. That's sort of our bread and butter. Of course, that also branches into residential and personal lines opportunities with homes and cars and everything else. But, it's an interesting time in the insurance business across the United States. And it's a particularly interesting time in the insurance business in a coastal area like Worcester County. Okay. Yeah. I threw all my chips into this on January 1st of 2020. Okay. Which was just, looking back, crazy. Okay. 45 days later, the world fell apart. We weren't quite sure how it was all going to play out. It's ended up, I think, just like for everybody, been absolutely amazing. But there's been incredible changes to the insurance industry in that short period of time as an effect of COVID. And mainly, it's the cost of paying for claims. So, the cost of construction, as you see as a realtor. I mean, what's building going for right now, a square foot in Ocean City?
It's a great question. I mean, it obviously depends on where you're at, but I mean, you're well over $200 a square.
Well over 200. Yeah. If you're going to build something really nice, I think you're looking at three and a quarter, even in some cases. That stuff was $250, 3 years ago. And that translates into higher claims, getting paid out. And the auto industry is even worse, with labor and with the shortage of products that go along with, fixing automobiles that have been, hit or totaled or whatever. It's just the costs are not there. So for the first time in a long, long time, most insurance agencies, I shouldn't say most, but many insurance carriers are paying out in 2022 and year-to-date in 2023 more claim money than their premium money that they're taking in. So their books are upside down in a lot of cases now, which is absolutely crazy if you look at the history of the business. And it's pretty easy to see what that's going to translate into, right? Higher premiums.
Yeah.
Right? Because nobody can go, you can't pay more money than you're taking in. So, it's been an interesting time that way, in that you have to offer people products that make sense for them. Make sure people are buttoned down when it comes to things like deductibles and certain types of coverage, that they have to have certain types of coverage that are in their policies that they're never going to use, and really ratchet that down so that everybody's, not getting caught up in the inflation game.
Right. Yeah, I mean, I can say that in the real estate end, especially the condo end, I've heard of more issues with condo associations being dropped from their insurance this year than I've ever heard ever.
Now you get into the coastal aspect of it, right? So you've got this crazy stuff going on in Florida. We've got this crazy stuff going on in California. We've got, carriers, like huge name brand carriers like State Farm pulling out of Florida. I mean, who would have ever
in California,
thought,
right?
Yeah, and then these carriers, they don't look like, oh my God, losses are great in Maryland. Let's give these guys a great premium and then charge extra money to everybody in Florida. I mean, that happens to an extent, but they're trying to balance their losses with premium from everybody. So when you have crazy losses in certain parts of the country and you're with a carrier that's insuring in those parts of the country, you're going to be chipping in to help make them whole, after they got to pay out all this money. And that's what you see going on in Ocean City, Maryland. That's what you see going on, throughout the Mid-Atlantic is really, I would argue, an unfair offsetting of losses that are taking place through the rest of the country.
Yeah. And it's everywhere too. I mean, I've got a good buddy down in Orange Beach, Alabama. It's close to Florida, obviously. Golf. They've had hurricanes down there, and we trade stories. He sells real estate right there in Orange Beach and Gulf Shores, right on the coast, kind of like us, and then a lot of condos. So I'm asking him, like, what's going on? Are we seeing the same kind of thing with condo fees going up a little bit because of insurance? The same deal. So it seems like it's across the board, even though they're more high risk than probably we are.
Yeah. For sure. Now, there's ways to mitigate, as these companies sort of start feeling their way through this, they're starting to offer credits and things to people that are really high and tight on their storm mitigation and on their loss history and things like that. So, we're trying to get people to buy into higher deductibles, self-insure as much as possible. That's where like HO6 policies really come into play. When your homeowners association decides they're going to self-insure a claim by assessing the folks within the community, you want to make sure you've got an HO6 policy that has proper loss assessment, things like that, which oftentimes they don't.
Okay. So can we start right there?
Yeah.
So, I mean, you understand this. I understand it a little bit, but just so our clients understand it. So that you mentioned the HO6 policy. So that comes into play when a buyer or an owner, so a buyer's purchasing a condominium.
Yep.
Right. And people always ask, what does the condo fee cover? And a big portion of your condo fee when you own a condominium is going towards the master policy for the insurance.
Yeah.
Right. So
that's a big portion of it.
Right. And so that's your fire, your hazard liability, wind, hail, that's all inclusive with the master policy.
All inclusive on a master policy for the building at large and any shared amenities, parking lots, pools, things like that.
But the owner is required in the state of Maryland to also have an interior insurance policy specific to their unit.
Walls in coverage, HO6. That's where the HO6 terminology comes in. That means walls in.
Okay. And then, so what are the minimum requirements with that? And then what have you done to kind of beef that up a little bit to make sure that everybody's properly insured?
Well, the second part of that's really like a case-by-case sort of scenario. But everything sort of condo insurance related, and this is really boring, and I apologize.
This is what our listeners want.
Okay, there's nothing really, really, really fun about talking insurance. This is probably going to be the worst listened to podcast on your whole roster here. But everything on the insurance side having to do with condominiums can all go back to the Maryland Condo Act, and it's all spelled out sort of right there what the boards need to do and what the individuals need to do. Okay, so from a master policy from a master policy perspective, they have to have property coverage for the buildings. They have to have property coverage for the common elements. Okay, think of it like this: the Maryland Condo Act was written because Maryland, the legislators of Maryland are thinking, okay, there's a lot of common folks investing and buying condominiums, and anytime something like this happens, they have to be protected, right?
Right.
So they might not have the knowledge of insurance and construction and all these things like the people that are putting together these deals and these condominiums do. So we have to protect them. And the Maryland Condo Act was really made to protect them. So it's saying that you have to have a board of directors. You have to have meetings. You have to have reserve studies from time to time. You have to have building studies from time to time. All these things so that, for the most part, people that are investing in individual condos aren't losing their shirts when something happens that could have very easily been avoided if somebody was on top of it.
Got it.
Okay, so the main thing that it says, or one of the first things it says in the Maryland Condo Act, is that you have to have property insurance, and you have to have liability insurance. So if somebody hits their head in the pool, if somebody falls in the parking lot, individual condo owners shouldn't be at risk for that.
Got it.
Okay. Now, kicking down to the HO6 policy, and where it does come into play is it says they shouldn't be responsible for that, but you can assess them up to $10,000 per occurrence if those things happen. And that's where you have to have your loss assessment coverage in the HO6 policy. So the HO6 policy will cover those assessments, okay, if those things happen, right? And that's becoming really, really important because as the cost of insurance goes through the roof, more and more condo associations are self-insuring these $40,000, $50,000, $100,000 claims than they ever have before. So they're kicking that back on the condo owners instead of filing insurance claims because they don't want their insurance premiums to go up. Make sense?
Does.
Okay.
Yep.
So if anybody's listening to this and you own a condo in Ocean City, Maryland, you're going to take one thing away from the insurance conversation. Go check your HO6 policy, and in the loss assessment, it should say at least $10,000. If If it doesn't say $10,000, if it says 1,000, a lot of carriers default to 1, a lot of carriers default to 5,000. That needs to say 10 because that is the piece of the HO6 policy that I see claimed more often than anything else.
Okay. So if I understand this correctly, this is the way I've always explained it. I'm with a client, and you can see if I'm doing it right.
Yeah,
but I always explain to my clients that you have coverage from the master policy. You as an owner are responsible for the first $10,000 of the deductible for the master policy if your unit causes damage to another unit. But you're going to have HO6 policy in place, which might have a smaller deductible and kind of gives you some gap coverage from what your deductible is there up to the $10,000. Is that correct?
You're kind of mixing two scenarios. So you have the basics of it right, but we'll run through two scenarios. So the first would be like a hurricane comes up the coast and rips off your roof.
Right.
Okay, and it doesn't have anything to do with your unit offending another unit. Okay. And it's $50,000 to fix. It's $100,000 to fix, and there's 10 condo owners. Okay, the condo board can assess the owners up to $10,000 to pay for that, rather than issuing it to insurance. Okay,
regardless if your unit was at fault.
Regardless of whether your unit was a fault or not. And when people say, I want to make the distinction also. When people say assessment coverage, retiling the pool is not assessment coverage. It has to be a covered peril. It has to be a wind, hail, something that's covered by the insuring document in order to do this. It can't be, we need to repave the parking lot. You're right. It's completely different special assessment. Yeah. So you get assessed for a new roof, and then your HO6 policy will cover that $10,000 that they're assessing you. Maybe they're only assessing you 5 or 3 or 4 or whatever, but they can assess you up to 10. You need the 10. That's the first thing that loss assessment's for. The other thing, the common scenario would be like you said, your sprinkler head busts and leaks into the condo underneath of you. Well, you owe them the care of fixing their unit. Your unit, you were at fault. You have to be in charge of fixing it. The loss assessment will also pop in there. Got it. Yeah. So if your unit floods a whole stack, we saw this a lot during like 2013 and 14 when we were getting those bomb cyclones when the temperature was dropping from like 50 degrees to 0 degrees in like 4 hours. Remember that?
Right. Yep.
So we had units where like something in the unit was breaking, a pipe or a sprinkler head or whatever, and they were taking out a whole, $1 million worth of condos underneath of them. And then, rather than having them pay that, the master pays that, but they have to pay the deductible for the master policy, and that's where that loss assessment comes in.
Got it. Is there typically a deductible on the HO6 policy?
There is typically a deductible on the HO6 policy. The HO6 policies are like small peanuts when it comes to premium in most cases. They're like usually, $600 to $1,200. So buying down the premium with a deductible doesn't usually make a lot of sense in those cases. So standard $1,000 deductible is usually the way to go.
Okay, so that $1,000 is going to protect you for coverage up to $10,000 in the gap piece,
right.
but could be millions based on what the damage was.
Well, and a liability claim, sure.
Got it.
Yeah,
got it. So the good news,
but it's only going to they're only going to cover you for what the cap of the liability is. So if you've got $500,000 in liability, then they're only going to pay out $500,000 liability in case somebody gets hurt or something like that. Then we get into umbrella conversations.
Okay, so now we're getting real deep.
Yeah.
But what I want, my clients, our clients, to get out of this is to know that there's, if they speak to the right person, and they get some advice as to what they really should be doing, as opposed to just saying, I want the cheapest policy. Mm-hmm. They're going to be protected in the event that something happens, and that they can rest assured that buying a condo is a good thing as long as they've got everything in place.
Yeah, so it's pretty simple when it comes to the HO6 policies. Make sure you have the $10,000 loss assessment. Okay, I'm talking Maryland now. Make sure you have the $10,000 loss assessment. Make sure you've got ample coverage for your personal property. Right. Make sure the personal property is rated as a replacement cost, not as actual cash value. Okay. That's a big deal, right? If somebody's, if you get a new couch that's 10 years old and they're going to depreciate it at a year. You don't want them paying you half a new couch. You want a full new couch, right? And we're talking about coverages now that are like pennies on the dollar. I'm talking $5 of annual premium to get replacement costs and personal property instead of actual cash value. So you want to make sure you've got the loss assessment. You want to make sure you've got replacement costs on your personal items. And then you want to make sure that you've got enough coverage for improvements and betterments that you're going to be able to rebuild the condo the way you have it in the event of a loss, because the master is only going to give it to you how the builder built it.
It's a builder grade.
How the builder built it. So like, that's the way that they say it. How the builder originally delivered it. Now, if you have a condo that's 50 years old, I think, and we should bring an assessor in on this, or a claims adjuster in on this, but they typically default to like the oldest unit in the building is the way that I understand it. We don't see a lot of that. Often. So I don't have a lot of recent memory on that. But that's the way they would typically do it. So you want to make sure that like if you've come in and you've totally redone your condo with custom cabinetry, custom flooring, things that like are really a head turning sort of, proposition, you want to make sure you've got enough improvements and betterments coverage in there to cover that.
Got it.
And in Ocean City, Maryland, I mean, it's really, $150,000 is usually, the right
coverage.
In coverage. Yeah.
Okay. Yeah. So, I mean, I know one thing that does come up from time to time, especially in this market with these higher interest rates, we've seen definitely more cash purchases. And, a lot of this insurance talk where it would come into play for me over the years had to do with lenders being able to finance a condominium, finance a property, and requiring a certain amount of coverage. And I think one of the mistakes, this is one that I think just everybody who's thinking about paying cash for a condo needs to remember, is you still need insurance. Just because there's not a lender dictating that you need to have a certain amount of coverage, you still need insurance on that condo.
Assuming you're not a dice roller.
Right.
Yeah, I mean, you do have your crazy dice rollers that don't believe in insurance, and as an insurance person, I've seen people get stuck too many times, to go along with that. But, you got to have, especially in an area like Ocean City, where the instance of claims are much higher than anywhere else in the state when we're talking about property claims because of our wind-driven rain, because of our hail, because of our wind. You gotta have at least basic coverage that's going to get you back up and running.
Got it. And then one other piece with that then is liability. So you have your typical HO6 policy, but what if you are going to be renting the property out? Is there anything else that you need to have from a liability standpoint, or is that all kind of built into?
It's going to be in the application. Okay, you got to make sure that the application that you sign, that you've checked off, yes, you do have tenants in the property. Okay, otherwise it can be excluded. Many times you'll see exclusions, especially for short-term rentals in HO6 policies. In terms of their liability, you have to make sure you have a policy where you've disclosed that you're going to be doing Airbnb or VRBO, or you've hired a local manager, and you got to make sure that that's not excluded in the policy. It's going to be pretty rare to find a policy that says, yes, we cover short-term vacation rentals, but if it's not excluded, it's included in most policies.
So most policies it is included.
Yeah, but most policies, I would say most policies it is not included.
Okay, so you need to ask.
You got to ask. You got to have that in writing.
Got it.
Yeah.
Got it. Okay. So that's condos. I mean,
that's condos.
Snapshot with condos.
Yeah, and I'll just go back. You mentioned, we talked briefly about making sure that the condo policy has everything that you need, and we jumped into HO6. But where that really comes into play is on the master policy, because that's where you get into places where, you spend another $3,000 or $5,000 or $6,000 a year. It can save you big in the long run, and things like wind and hail buybacks, because you have some policies that, they come in with a $50,000 wind and hail deductible, and you can buy that down for a few $1,000s, right? Which makes a huge I think if you can get a good deal on a wind and hail buyback, things like that. So don't be penny. Don't be, what is it? Penny poor, pound full. Whatever. Don't be cheap. Don't be a cheapskate when it comes to the master policy. Make sure you're locked into something that's going to really benefit your homeowners in the time of a claim.
Right. So you're speaking now to condo associations.
Boards.
Yeah. And we still see a lot of condo associations in Ocean City, which are somewhat self-managed. They don't have a third-party management company, so you've got a president, secretary, treasurer, vice president, and they're all getting together and trying to determine what's going to be best for the association, and obtaining their own insurance.
Right.
So that's where you might have maybe be more susceptible to having issues with being underinsured because they're not getting the guidance of like a management company that does it every day.
Yeah. That's exactly right. Now, it's the same as like being a vacation rental manager and having people that want to do it themselves on VRBO and Airbnb. That's great if you know what you're doing. Mm-hmm. That's great if you have a good connection of service people down here, and it's great if you know the business. If you're not into those things, then it's makes more sense to hire somebody.
Right. So condos kind of covered there. HOAs, just a straight up, you own a home in a homeowners association, a single family home on your own lot, no condo fee, but you do have an HOA fee. Anything people need to know about there, or is that just fall in normal homeowners?
I'll tell you what, man, Ocean City. So when I walked into this podcast, I'm thinking we're talking about Ocean City, right? And that's pretty much, is that fair?
Yep.
And I will clarify that because the difference between single-family home ownership in Ocean City from an insurance standpoint to 2,500 feet off the bay is night and day with regards to the insurance that you can get, the carriers that write it, the shopping that you're able to do, the due diligence that you're able to do, through cost savings by doing some due diligence to different carriers and things is night and day. We've got very minimal choices of single-family home insurers on the barrier island of Ocean City. Once you get half a mile off of the Assawoman Bay, it opens up to almost the whole world.
Got it.
So you got to know that. And you also have to really have the conversation with, I tell a lot of people, when they call me for single family homes in and around Worcester County, who's the primary insured with? People think that they need an agent down here, but you don't always need it. Oftentimes, going through whoever your primary person is on a second home is going to be better.
Really?
It's just going to be cleaner.
Okay.
Yeah. It's one person to talk to. And, I'll shamelessly plug Erie in that scenario. Erie's one of our carriers. They are our main carrier. We think that they're the best at what they do, and they've got some coastal guidelines that are fair. I won't say they're lenient, but they're fair. And if you've got a primary home with Erie and you're looking for a secondary home, that's a great example of somebody that you should make the first phone call should be to the Erie agent and not necessarily to a coastal agent.
Okay. So I didn't realize that. I didn't know that Erie was doing a whole lot, So you're saying on the island in Ocean City?
No, when you move into Ocean Pines, Berlin, areas like this, they become very competitive. As does if you have your primary, a lot of our secondary homeowners come from Northern Virginia, Central Pennsylvania, Baltimore. The first call that they should make really should be to their home guy.
Yeah.
To say, what do I do to this? Because you can wrap it into everything that you have, and there's cost savings there.
Got it. So that maybe that kind of jumps into about your business model with what you're at. I mean, it sounds, from what I understand, Bradley Atlantic is an insurance broker. Possibly, you have multiple channels that you can go to if you need to, but then you're also a carrier for Erie. Is that correct?
Yeah. So Erie's so we're not captive. Erie doesn't. They don't make their agents be captive because of the ease of doing business with them, and because of the price point. If you qualify, most of our business goes to Erie just because they are almost impossible to beat if you qualify. And then, we have got a stable of other carriers that we use in instances where it makes more sense. And it could be that, Erie doesn't write a certain class of business that, another carrier does, or it could be that, another carrier has sharper, setback rules for what they'll allow when it comes to insuring like coastal property. But, we're 95% Erie, and then other companies if and need be.
Okay. What about flood insurance? What do people need to know about flood insurance?
So there's a lot to know about flood insurance. So first of all, you need to know where you are, okay, in the floodplain. Right? You need to know how you're zoned, and it gets incredibly complicated in Ocean City. And I say this with a grain of salt, but it's really true. AE bad, X is good. Okay, so your flood costs are going to be pretty nominal if you're in an X zone. They're going to be pretty substantial in most cases if you're in an AE zone. And obviously, there's things that you can do from a construction standpoint to mitigate, your chance of a loss, and thus mitigating the premium that a flood policy is going to charge you, right? Like having the proper flood vents, having the property lifted off the ground, with certain amounts. And I don't know all of the ins and outs of exactly what's going to give you the best pricing there, but elevated properties are better, flood vents are better, new construction is better. Anything where the water is going to be moving in and out and not sitting in your house is what a flood insurer is going to look for.
Got it. And in flood policies, I mean, people come to me like, well, what's flood insurance here? How do we get the best rate on flood insurance? Is it governed by the government, the FEMA policy? Or is there private insurance? And I think I've heard you talk about both.
Yeah, so flood floats a lot more than a regular policy does because these zones are being redistricted all the time. Right? So if something goes from an X to an AE, you're going to see a giant jump in your flood policies. It can also go the other way, and has gone the other way very recently in Ocean City. I think, when did they last redo the maps? Remember when?
Like 5-6 years ago.
5-6 years ago, when all those oceanfront properties went from AE to X, and then everybody's flood dropped to a quarter of what they were paying before. That was huge. That was a huge boon to the savings of condo associations throughout Ocean City. So it can go either way, but yeah, you can get a FEMA-backed product. Okay, which is not always more expensive, but oftentimes more expensive, which means the government, FEMA's backing the product. Mm-hmm. And then you can get private insurers that are going to not have that FEMA backing, but are going to be in the game and writing through their actuaries like every other insurance carrier is. And you can often find better premiums there. It's just a matter of whether or not you like, knowing that the government's backing your product, almost like having, a checking account with $250,000 in it. You want to have it in an institution that's got that insurance that's gonna
back it.
Gonna back it.
Does that affect anything when it comes to lending requirements? Like, does a lender require it to be FEMA?
No.
Okay.
The lender doesn't require it to be FEMA. The lender requires certain legal language that is very close to FEMA. So if you're going, so an underwriter at a mortgage company is going to want to see the declaration page of the private flood policy, and they're going to want to make sure that there's certain language in there that they like to see. And everybody's aware of that, and everybody's written the property everybody's written those policies for the most part the way that they need to be written for a loan closing.
Got it. And then the thing that always comes up too with flood insurance is people ask me, well, can I assume the flood policy of the previous person? Is flood transferable?
Flood is transferable. Yeah, flood's the only one that is transferable.
Okay.
So you can transfer, in the event of a loan closing, or in the event of a title change.
Okay. And then if say there's no flood policy in place, or the person previously had paid cash, so they just let their flood, they didn't have a mortgage anymore, so they didn't have their flood policy in place, but the new person is getting financing, so they require a flood policy. What do you require to be able to insure it? Do you need an elevation certificate, or do you have some sort of other software that allows you to quote a policy?
We'd always prefer an elevation certificate. It's a very rare circumstance where an elevation certificate's going to make the cost of the policy go up or make the coverage go down. An elevation certificate is always going to be in your best interest. It's sort of like when you close on a piece of property. It's nice to have a survey.
Right.
Right. We very rarely get surveys when we close on properties, but it's really nice to have a survey. It's nice to know where your property boundary is. It's nice to know whether the neighbor owns the fence or you own the fence and all these little things that you sort of just go along with. It's nice to have all that buttoned down. So, a flood survey is going to do that, and it's going to allow you to get a better policy, but not necessary. We do have software that'll sort of tell you what flood plane you're in, and it'll pull the rates based on that.
Okay.
And then there's going to be a series of questions that you have to know and you have to answer in the application that sort of will match up with the way that your house is constructed. Like all the things I was talking about before, like the height of your basement, flood vents, the square inches of the amount of flood vents. You have to know all that stuff if you don't have the proper flood survey.
Okay. Yeah. And that's something that's.
And if you answer that wrong, and then the adjuster comes out, you can be denied coverage if it's wrong on the application.
So how often do you
get the flood survey?
Okay, so that process then, that's just going through a surveyor.
Yeah, which right now, like everybody else in Ocean City, they're like backed up forever. But typically it didn't take very long to do.
Yeah.
Yeah.
So what else do we need to know about insurance? What else is one of your niches? I mean, I've been talking a lot about how it affects my business, and your business affects my business. Tell me more about your business. Like, what drives you? What's your passion with insurance?
Man, we've been getting a lot more involved with the process of seeing these real estate be built, which is really fun. I mean, most of the insurance that we're writing isn't necessarily the property that you see when you're driving down the highway. It's the people that are building the property, and that's
business insurance.
It's business insurance. That's sort of become our niche. I mean, that's always been Erie's niche, but that's become my niche. I mean, wrench turners, masons, electricians. That has become what we are, sort of our bread and butter, and what we do. We do it all, but working with these guys to structure their policies properly, making sure that they have the right insurance that's going to fill their needs, that's going to be what their insurance holders need to see, that's not going to hold them up from getting paid or land a job. That's become what we sort of live and thrive by doing.
Got it. And does that cover like I don't know if other industries have it, but like in real estate we have E&O insurance.
Yeah. We don't. Yeah, so E&O would be one of the small sort of niche of brokerage policies that we go out for. So we would get that from a third party.
Okay.
Yeah. But we can do E&O. Sure.
Got it. Do you get into like life insurance and all those other aspects as well?
Absolutely. I mean, we do a lot of life insurance. We can do a life insurance for anybody, but it comes into play a lot when you have like partners in businesses, like key man insurance.
I heard it,
right?
Yeah.
So we do a lot of that. We do a lot of like, buy-sell agreements. If you're gonna, sell your portion of your firm out to your partner for $2 million, and he dies next week, you need an instrument in place to make sure you're getting paid the $2 million that he owes you. So we do a lot of that sort of life insurance for buy-sell agreements and things like that.
Okay.
Yeah, as it goes along to the importance of running and trading and building those businesses.
Got it. So how do you build your business? Like, how have you been able to hop in January of 2020, throw all the chips in? Obviously, you got to know the business, which is just part of it. But then how do you grow it? How have you been able to find more clients?
Not through digital marketing. I'm
No?
probably the only guy in the world that's saying that. Not through digital marketing, through cold calls.
Okay.
Yeah, I mean, we've got a database that tells us when everybody's, insurance policy is expiring, right? Or their work comp policies anyway. And we pick up the phone. We've got the great thing about what we do is that we can target our outreach so that when we're calling somebody, we actually calling somebody that 9 times out of 10 we can help.
Okay.
So with very targeted outreach is basically how we've grown the business. We've got a long list of all the guys that I just mentioned, the plumbers, the excavators, the electricians, and the HVAC folks, and we just touch them every month. I mean, it's just as simple as that. It's just those 10 calls a day.
Yeah.
Just like you guys. Yeah.
We should get you in real estate. Like, we need more of that, That's what makes a great agent too, is somebody who just, does their calls every day, just follows up. And it's easier to make those calls when you're, like you said, when you're touching people that like you can help. You're coming from a level of service.
It becomes a warm call.
Right.
Yeah.
Right. Because you believe in the product, you believe in what you can do, and it's truly, you're calling because you can help them change their business, change their life.
Yeah.
So
now I would like to get more into the digital advertising. I just, the cold calls, I can control it. And I'm a big fan of control. You know what I mean? So I know that if I'm going to go in, I'm going to allocate 2 hours to my cold calls. I'm going to get to appointments, right? Usually at least. The digital marketing, I've never taken the time to really understand it. I can see when I click on one of your listings that your face follows me around on my iPhone for the next 2 months, you know what I mean, until I stop clicking for it. I never understood how all that worked. So I'd put that question back to you. It's like, how have you grown your business? How have you done that part of it effectively?
Yeah. I mean, it's a lot of moving parts. There's so many facets of digital marketing, and I think we've only really scratched the surface with it.
Yeah.
And it's changing so fast. The original aspect for me in building my business, I was not super connected in Ocean City when I first started 21 years ago. Right, I was a come here. I came from Pennsylvania, and I transplanted here with my wife, then girlfriend, who's now my wife, and so I just had to meet people first. And try to figure out a way to meet people. Since I wasn't as connected, I ended up having to invest in the internet. So back then, there wasn't as many opportunities to buy leads. You kind of had to go old school and do the SEO. So the search engine optimization, building out the site, trying to have the right keywords so then people found your site. And then we started building a database. And then once we had that database, we were able to continue to stay in touch with them with email marketing, follow-up just like you're doing, and then found ways to get them back to the site. So once you get them back to the site, whether it be sending them properties on a daily basis or sending them podcasts with value where they want to come to your site to take a look at it, now they've been there, in the digital marketing world, like you said, has allowed us to continue to follow them around. Once they've gone there, I mean, you got cookies, you've got all these other elements to do retargeting, remarketing, and try to deliver them good content that they may have already indicated by visiting the site that they want more of.
Okay.
So that's kind of how we've tried to grow it. But the ins and outs of all the little keywords and in code and data, I can't tell you all that. I've had to go out and reach out to other people who know it a little bit better and lean on them. But I see like you. How you built your rental business originally, and the two gentlemen that you were connected with on the sales side, you're Terry and Chris, who are great real estate agents in Ocean City. I've always been very envious of how they built their business, because to me, it was kind of like that more just relationship type. They had a great product to sell and then just had a lot of relationships, where in the beginning, we didn't have those local relationships. So we really had to pay to play almost at one point.
I gotcha. That makes sense. Now, so what portion of your, maybe not portion, but do you find that there's like a sweet spot in terms of like cost per month, what you get back from the digital marketing side? No,
I think our costs have actually come down.
Is that right?
And I can't put a finger on like it's going to cost me, $122, across the board to obtain a new client, because every, I guess, different lead source has a different cost. But I will say that as of recently, we've been able to get more targeted, which then allows us to not spray and pray.
Yeah.
When you're spraying and praying, you don't necessarily you know who your client is, and you're just hoping and wishing that somewhere where you put it out there, they're going to see it and reach out to you. But if you can get really targeted, and put all your money into one spot where your potential client is, you don't necessarily have to spend quite as much to get greater results.
So where's that spot for you? Where's your potential client?
So for us, one of the major, past clients, number one, the highest and best return for our business is to work with the people who already know, like, and trust us, right? So if we can get really targeted with our past clients who already trust us and give them information, be the knowledge broker, knowing what's really going on, and deliver the best property options to them, we have a tendency to have a much greater return with those folks. Mm-hmm. But that's obviously only one pillar. You need multiple pillars, in my opinion, to be successful. And so we've fortunately been able to establish some great relationships. And this is another change that we've seen. And this is, I can't believe the podcast is going this direction.
No, it's good. I like it.
One of the changes that has happened is there are bigger players out there that are more difficult to compete with.
Sure.
Right.
Hey, you see that on the vacation rental side
right.
too. Yeah, for sure.
So on vacation rentals, it's your Airbnb, it's your VRBOs, I would imagine. In our world, it's Zillow, it's Realtor.com, it's Redfin. They control a lot of search on the pray and spray aspect.
Right.
You know, the general term Ocean City, Maryland real estate. It's very tough to compete with that. So, you know, Zillow and Realtor.com have built the trust of the consumer. They're showing up first. They're getting a lot of the traffic. So our niche has been able, really to establish great relationships with those companies to get inbound opportunities. You know, we're one of only 4 groups on the shore to have a special Zillow connection, which provides us with a lot of opportunities.
Okay.
That's truly helped us build our business. Same with Realtor.com. We have an exclusive contract for 9 zip codes here in Worcester County where we're getting all those opportunities when somebody asks a question. So instead of us investing quite as much money to be first in the rankings, we've kind of established some great relationships with some larger companies.
Right.
While at the same time underneath it, we've tried to build and establish more of that long tail, very focused SEO, where if somebody is searching specifically for one building in Ocean City or one community in Ocean City, we want to own that search. We want to pop up number 1.
Right.
So a lot of moving parts there, but that's kind of how we've structured it.
That's a ton of moving parts. And then so how many people are out there doing exactly what you do in Ocean City, Maryland, in terms of competing for that number 1 spot?
I mean, a lot. You know, obviously there's 25 brokerages maybe on the higher level that are trying to do that, but then you've got, 1,500 agents, that are local licensed agents in the greater Ocean City, and now we've got people that are coming from across the bridge that want to try to get in there as well. So there's a lot of competition. And the way that the world is going, the information is just changing so quickly that it's like every day there's something new.
Yeah.
So it's tough to stay up on top.
It is. Now, can you target based on where your buyers are coming from?
You could. You could, but that becomes difficult too. So say you know that you want to attract buyers from a specific zip code. You could target ads to that zip code, but once again, that's kind of praying and spraying because not everybody in that zip code is going to want to buy in Ocean City.
Right, that makes sense.
Right, so you kind of target the destination first. That seems to give us a little bit better results that way.
And this is mostly on the buy side?
So I would love it to be more on the seller side.
Yeah.
I think we in a low inventory environment, we're all looking for more listings.
Yeah.
Which is helping sellers, but that's also helping your buyers because you're giving them more options. But it's a funny thing, when I got in the business, my first broker told me, you can't find the buyers, but we all know where the sellers are. And so like you have a targeted, we know the tax records.
Yeah.
We know where our sellers live.
That's right.
We can target them at home with direct mail, maybe phone calls, maybe some digital marketing, which is that there's some options there.
That gets tricky, I bet.
But you can target them.
Yeah.
Right? But honestly, the way that the internet has evolved, since I first got into business back then, the internet has evolved so much that we now can attract the buyer.
Yeah.
So we're generating many more buyer opportunities every single month than we are sellers.
Okay.
So it's unique.
Yeah, sellers are an interesting thing because, they're hard to segment. You never know how or why a seller is going to get out. It's almost like random, right? It's like popcorn popping. It's not like, on the buy side or let's say in the insurance industry would be a better example. I know when, the cost of trucking insurance is going up around the country and I've got crazy good rates on trucking insurance, I know who I'm contacting that month.
Right.
You know what I mean? You don't have that luxury, which makes it a lot harder because you can't segment who you think is in the market to sell their condo, right?
Yeah, I mean, not yet. Well, there's technology going that way.
Okay.
There's definitely some companies out there that are looking at length of ownership. They're looking at what kind of mortgage somebody has on a property. So there's definitely some software out there, some tools out there that are trying to help find that information.
Can you know if someone's like underwater?
There are some indicators of that. Yeah.
Yeah. It's interesting. You ever listen to the Breaking Points podcast?
I have not.
Okay, it's like a news podcast. It's a little left-leaning, but it's pretty good. And they were rambling off some Airbnb data on one of their episodes from a couple weeks ago. And as of like June 15th or June 30th, somewhere in there, the Eastern Shore, Maryland, Airbnb was reporting in their top 10 down markets of the country, which I thought was unbelievable. I mean, and they were saying that, like, they were reporting numbers like between 30 and 40% down.
Yeah.
And I'm thinking to myself, God, if I bought a condo in 2020 and I was, thinking it was going to make $50,000 a year, and all of a sudden it's making 30, that's a big delta.
Right.
That might be something that I'm interested in parting ways with. So I was just thinking to myself, as I put on the real estate hat that I wore for so long, that has to be a decent market to start targeting, anybody that bought and owns a rental in the last 3 years.
Yeah, absolutely. I mean, I think that's definitely one segment of it, and I think it was only bound to happen. I mean, we coming out of COVID when people could be off and go anywhere they wanted,
right,
anywhere in the world at any time, besides the travel restrictions. But I mean, they had the flexibility to go because they weren't in the office. And I think as we see more people come back to the office and that requirement to be back at the office, that we may see some more inventory hit the market. We may see some of the rental numbers not be quite as rosy as what they were in the past. But I will say this as well. One of the things I've seen change since COVID is there's definitely more cash out there. If you look at the total number of equity that people have in their properties, I mean, it's like over 300,000 on average nationwide in equity, and so we see our mortgages that were lower, so there might not be as much financial strain to sell, and so they can hold on to it. And the other trend I saw is a lot of the people that I personally dealt with were not as much focused on the investment side, but more on the quality of life. They've always wanted to do something, and they wanted to have a place at the beach. So they had not been only focused on the rental. Where years prior, some of those those clients that you talk about that I was referring your way, that was straight up investment,
right?
But they bought it at a much different time too.
They're putting money, so people are putting money into their self now.
I think so.
Yeah.
Well, I think which leads into one thing I really wanted to talk to you about when we were kind of chatting off camera. I mean, I think for you had mentioned one of the reasons you transitioned from the grind of nights and weekends with rentals was to kind of control your life a little bit, to spend more time with your family, to have that annuity, that residual income coming in with insurance. Maybe you can talk a little bit about that and how that's evolved. I mean, what are your nights and weekends like now?
I still have my finger in the rentals.
Yeah.
So during the summertime, my nights and weekends are very much like they were. But for most of the year, it's a lot of swim practice.
Oh,
it's a lot of
Ocean Pines.
Ocean Pines.
Nice.
Yep. Hammerheads. Yeah. You have any hammerheads?
Not left. I miss those days.
Okay.
I miss those days of timing, leaning over and doing the timing.
It makes the meets go by a lot faster.
Right.
You go home with achy feet, though. Yeah.
I get the best seat in the house. I did that with my older three. They all swam, and I miss those days. But that's cool.
Yeah. So a lot of swim meets. A lot. I got rid of the boat in 2020. So my COVID sort of change of my life was I got back into surfing, which I hadn't done for probably 20 some years. And, we were kind of a boat. I noticed that a lot of Ocean City families sort of fall into the boat category or the beach category. And we were always sort of more in the boat side. But the kids got to the age where, they need more going on. So the beach, surfing, boogie boarding, that sort of thing, you just got to be more fun. Yeah. So we've become more of a beach family. So we're Assateague weekend in, weekend out pretty much over the last couple of years.
Nice.
Yeah.
Assateague, it's amazing. How many people go out there to surf. I mean, it's like almost like a little surfing mecca out there.
It has, and it's more all the time. I don't think I was the only person that sort of COVID grabbed as in terms from a surf scenario in 2020. But you see it all the time, and it's a great group of people.
Yeah.
Yeah.
Are you driving on? Or are you just going to the federal park, state park? What do you do?
So when I was having trouble even standing up, I was going to the federal side because I could be more alone, and I'm kind of an introvert. But once I got to know what I was doing, it's just much easier to go to the state.
Okay, straight in.
Straight in. Yep.
Got it.
And no driving on, no deflating the tires, no inflating the tires, no washing the car down afterwards, just grab and go.
Right.
Yeah.
And that's one of the beauties of living right here in Berlin. I mean, you're there in just a few minutes.
Yeah, Berlin's been a great transition for us. The town of Berlin, I've always liked it. Living in it, it's a high tax rate here, as you know.
Right.
But it's like one of the best checks that I would ever stroke, to be quite honest with you. There's always stuff to do. I think we save money living here because we take so many walks.
Right.
We hang out with so many other, great families that we've met here. There's so much free stuff to do by way of concerts, by way of events. I couldn't be happier. I enjoyed listening to your podcast with Ryan. I think that we should all try to support him as much as possible because he is taking the events of this town in a direction that's pretty positive for all the business owners and for the tourists and for the people that live here.
Yeah.
So really exciting.
And he's all over the place. As we were doing the podcast, I've seen him go past.
Yeah.
He's on the move all the time.
Oh yeah, no, he's knocking on doors. Talk about somebody who'd be a good realtor. I mean, he doesn't mind asking for the sale.
Right. No, that's awesome. And you're right here. Kids are growing up here in Berlin. I mean, it's a little piece of Americana. For sure. And I've said this on other podcasts. I said it to Ryan. I mean, we travel, we love to travel. And you think about all these little small towns. I'm always looking for a walkable town where I can stop and, have a great meal and, look at, hop into a shop and go look at architecture and look at homes. And Berlin stacks up with the best of them.
It really does.
I mean, it's a hidden gem.
Have you been to the place right across the street here?
The Village
Lounge?
We have.
Oh.
We actually interviewed her right when she opened.
Did you really?
Yeah.
Her coffee is unbelievable. Her sandwiches are unbelievable. My kids go in there. They'll play a game of chess. They'll come back to the office. My kids both, they stay home. They're at the age where they can stay home over the summertime. So they've become little sort of lounge rats, because it's right across the street from the office, and they can play chess and grab a drink in there. And Erin couldn't be nicer. And I mean, I'm so happy she moved in across the street from us.
Her daughter, awesome. Lotus, is like our fifth child. So
is that right?
She's at our house all the time. So yeah.
Oh, I didn't know that.
Yeah,
cool.
Yeah. She's great friends with my daughters.
Small world. Small town.
So yeah, we see the family quite a bit.
Oh, that's great.
But well, this is awesome, man. What else do we need to know about you, your family, Berlin, and most importantly, I want to support your business. I want our clients to support you. What first off, I mean, how do they reach out to you?
Okay, so you can go to bradleyatlantic.com. You can also just what should I give you our
whatever you're comfortable.
It's Denny M at bradleyatlantic.com, and then our phone number is 443-513-2300. What everybody should know about us is that this sounds very cheeky, but we are in the people business. If you ever have questions about the costs of building or what to insure a building for, how to value a building for rebuild cost, how your policy is written, we would love to get to know you. Right? We even if we're not going to make any money from an insurance sale to somebody, we would love to take a look at the policy, say, hey, this policy looks high and tight. Don't do anything with it. That's another person in our database. That's another connection we have. It's another somebody to say hello to on the street. So if I can help anybody in terms of just taking a look at what you have, or if you have any general questions, call us. Anybody in my office, will help you. I should mention that I work with Jenna, my wife, who's absolutely fabulous. And in terms of the commercial side, actually writes much, much more business than I do with those wrench turners and the HVAC folks, and does a great job on that side. So, talk to me, talk to Jenna, talk to the Bradley boys. And we're here to make connections. We're here to talk.
That's awesome. And what you say is absolutely true. I mean, I've had people that have contacted you, and you've gave them advice that said, "Hey, I can help you here, but I can't help you over here."
Yeah,
you got
we've written some good fun deals. Yeah, like that flood one. We had that flood policy up in what was it, Dewey or something?
Fenwick.
Yeah,
Bunting Avenue, Fenwick Island.
That was a fun one. You don't get those every day. Well, that was an interesting scenario.
Right.
And that's where you're great, because you figured out you had basically been dealt a card that probably no realtor in Worcester or Sussex County had been dealt, at least in the recent history, and you had to figure out how to work that.
Yeah.
Remind me what happened there.
So what we had a duplex in Fenwick. And this, other people have had to deal with this. I know they have. And this is where asking the right questions and doing the right research and it can certainly help. But what we had a duplex that had zero association. There was no condo fees, no shared costs of any kind, and truly was living like a duplex, like two single family homes.
Thought it was fee simple.
Okay. Right? And when I asked them any kind of association, nope, no association, no rules, restrictions, nope. We just do our thing, they do our thing. We're friends, but duplex right on the ocean, direct ocean front, multi-million-dollar property. And as we're going through this, the obviously title comes back, and those were all originally subdivided as condominiums, and so sometimes somebody who's doing a subdivision has better luck being able to do it as a condominium as opposed to individual lots.
Yeah.
So they're two separate units, but they keep it condominiumized. And there's the one thing like in Ocean City that's typically the deciding factor is how many water mains do they have? Because with a condo, they typically have one water line coming in, and then everybody gets these wastewater bills. But not everybody's got their own water or sewer. So it's the same thing, up that way. And so there was truly originally developed as a condominium, defunct. But when the lender went to finance it, they wanted to have, since it was technically deemed a condominium, they wanted to have a master policy for the building. And all these years, each side of this duplex had been paying their own insurance. So each had their own like single family type insurance, no HO6 policies, like for a condo. And so the lender was requiring that there be master insurance policy, not only for the general insurance, but then they needed flood.
Oh, that's right. You had to have master and flood. So you had, and it was like within like 10 days or a week or something that you needed to get that done, right?
Right. And I think, so then you ended up doing a portion of it, correct?
I think we ended up doing the flood piece.
Okay, you did the flood.
We ended up doing the flood piece, and then we were able to get a master through...
Lloyd's? Is that?
Yeah, who did they go to? They went maybe with the Dealey agent who do a great job.
Yeah, it was actually somebody in West Ocean City who they had talked to first.
Okay.
And that's where you gave me the advice. You're just like, hey, man, they're already there. Like, there's no reason for us to step in there. We can take care of the flood, and help you through that process. And honestly, it was great advice that you gave us. You not only, were honest with us saying, hey, I don't need to get involved here. Go that route. That's going to be your path of least resistance. So you gave us great advice there. But you were able to advise the whole thing to make it happen. Yeah. And ultimately, we got it done. So I appreciate that, but that's just one of these unique.
That was a cool property too.
It was fantastic. I'm getting ready to list something similar in Ocean City, hitting the market this week. So
good
duplex.
Good. That's
type
great
deal. Hopefully it's not. I gotta double check, make sure it's not a condo.
Right.
So I don't have the same issue. But lots of moving parts, obviously, with real estate, and I'm fascinated, with what you run into on a daily basis. But I truly believe that having you on here is going to hopefully give some tips and some pointers to our clients that they can benefit from, and hopefully they'll reach out to you to help with their insurance needs.
Absolutely. Yeah, I'll keep listening, and if there's anything I can do for you, let me know. But we'll have to get that second lunch on the books.
I'm up for
too.
it.
All right.
More business opportunities in the future here.
Yeah, right. No, more friendship opportunities.
All right.
Good to see you, man.
Good seeing you as well. Thank you so much for being on here, Denny. If you guys like this information, please share it with your friends, like and subscribe, and we will see you back here on the Running Real Estate Podcast next time.